Hey, Willie, you feel that? You feel that,
What is
Willie?
that, Vin?
I think there's some earthquakes in finance, and that is the focus of our next episode, which is now. And I think this is a very appropriate topic considering everything that's going on in the world, especially in our country with the economy and with finance. And I think it's important that we inform our listeners on everything around this, especially around stock prices, the meme stocks, all the SPACs, how this all affects them personally, with mortgage rates, interest rates, and so forth. So I'm looking forward to this episode. I think what do you call the tremblings? What do you call them?
I thought that was you farting.
Oh, screw you. Are are the earthquakes now becoming larger and larger by the day?
Well, yeah, I agree. Let's uh let's talk about the world of finance. First
Finance.
of all,
Try not to get
obviously,
try to get slapped like the French president.
yeah, but he was going to swing back, so kudos to him. That's awesome. If I were a political leader, I would absolutely throw a fist at somebody that assaulted me in public, just to save face,
Yeah,
if
only
nothing else.
yeah, only if France was that tough back in the day, like World War II. But anyways,
Oh, Jesus. Well, now that we've lost our French demographic of listeners, yeah. So, I mean, I see a lot of this obviously is centered on the stock market and the whole stonks only go up mentality. Uh, I think uh, I think it's probably informative, especially for some of our retail investors out there. If we look at how these prices are supposed to work in general on a happy day when things aren't going insane.
no, I
Uh,
absolutely
so,
agree. I mean, we get questions all the time about which stocks to pick or what should I do with
oh
my
sure, I
portfolio and
love that.
everything. Yeah,
I love that.
so
What should I invest in? Like, oh, invest in the market, jackass. Why don't you tell me a little bit more about yourself
right.
instead of that? But I
So
mean, I
let's
think what
inform our
people,
listeners now.
sure. I mean, I think what people need to realize is, when you're buying stocks, you're literally becoming an owner of the company, a part owner. Your shares are exactly that. They're shares of the company's equity. So, you should probably choose your portfolio companies wisely. You not just It's not a good idea to just give your money to whatever, stupid thing catches your eye, even though that is kind of how a lot of people work. And these companies issue stock basically to raise capital, right? It's equity financing, or to have some asset that can be, you can think of it as good as cash for certain things like buyouts. Like if IBM wanted to pay you $1 million to buy out, whatever thing it is that you made. Okay, cool. Like, you can have $1 million, but if they offered you an all stock deal as opposed to an all cash deal, like, well, okay, you get $1 million of IBM stock now, but what could that be worth in a couple years? Like, are you going to forego $1 million of cash now to potentially have more than $1 million worth of stock later? And that's not. Obviously, that's not the focus of this episode, but it is important to know that these assets are not just ones and zeros on your phone. They actually represent real financial positions in the world. And normally, when you fire up your phone and you choose your app of choice, I'm not going to name any, given some of the controversy that's going on, but you're exchanging in what's called the secondary market, right? The primary market is when a company goes public, and IPOs or initial public offerings. Those prices are set by the investment bank that's doing the book running, and also includes things like assigning the company valuation, how many shares are offered, what's the lockup period. So if you buy into an IPO, can you immediately dump the stock, or do you have to hold it for a certain amount of time? But us little people, exist in the secondary market, and
Speak for
nominally,
yourself.
my fellow little people, my fellow degenerates, we exist in the secondary market, and normally when the sky is blue, the sun is shining, and everything is going well, the stock prices are going to be determined by supply and demand, right? So when you trade, you are actually doing that. You are trading. There has to be a counterparty for a trade to work. Normally, that's a market maker or some other liquidity provider that I click buy or sell on my free no commission app, and somebody else in the void has to take a counter position to mine in order for that trade to execute. Now that's going to lead to some really interesting phenomena that we've seen lately that we'll get into later on. And the
Right. And let
other,
me take a step back. I mean, to
yeah,
simplify it further, right? And to make it more exciting. I think
are you
one,
saying I'm not exciting?
no, you're boring me there. So, I mean, to us, it's not boring, but I think for our listeners, I'm trying to engage them a little bit more here. And I think what you're saying is, and this is what I tell people all the time is owning stock is really exciting because, as you said before, you are owning a piece of a company
Right,
and and a company is more than just a name on the wall. These companies have employees, they generate products and services, they contribute to the community and to the markets. Like it's so significant to be able to say, even if it's one share, to be
right,
able to go and say I own one share of, let's say, Walmart or
right.
Amazon or so forth. Like that's really meaningful. And I think people have to really take a step back and
Absolutely.
understand that hey, you yourself, Joe Schmo, whoever out there, right, can own a piece of a company of that magnitude. And you yourself can say, because every share that you own, you have a voice. That's the
Hmm.
beauty of it. Yes,
Oh, you get
it's
to vote at the shareholder meeting.
yeah, that's what people don't understand. It's that's why when people ask what stock should I buy, it
Hmm.
it's both. It's a it's humbling for people to ask all the time on
Right.
what stock they should buy from us, but it's also something I like to counter and go. It's more than that. What do you believe in? What products do you use every day? What services do you use? What companies inspire you? It's yes, we'll break down the financials, but I just want to make it clear to people how the how that is and why our free market is the greatest market in the world. Like
Right.
why free market and capitalism is great is because it enables a lot of people, anybody, to be able to own a piece of a company and your voice be heard and for you to be able to understand more about what that company does. So,
Well, it's belief, right? Like
right.
if you hear people's like, "Well, I hate my job," then you have to ask them, "Well, why did you take that job?" It's the same thing with investments. Like, well, what does this company do that you invested in? Oh, I don't know, but they pay a 3% dividend. Well, if you don't know what the hell you invested in, why are you investing in it? And that's kind of the foundation for a lot of the
Right.
activist investors. Now companies are getting hammered if they don't have ESG guidelines or climate, uh, and not activities, but climate initiatives that
Yeah.
their investors don't agree with. Right? Like when you're
Right.
literally voting with your wallet, and when you own shares, you do have a say in what the company does. Right? Like if you own one share of Exxon, they're probably not going to care a lot about what your opinions are. But if you and a million of your friends each own a share of
Exactly.
Exxon, suddenly your voice becomes very important to
Right.
management.
But if you think about it, back to back to one of the points you made about how there's two parties for trade. You have the
Right.
institutional investors and you
Right.
have the secondary market. If you think about it, the institutional investors are a lot like the secondary market, just different quantities of money, right? Because
Oh, sure.
the way institutional investors work, a lot of these folks are private equity funds, large family offices, banks. What do? It's a bunch of them and their friends who collectively own a large amount of money because of multiple high net worth individuals, or even a
Hmm.
collection of middle income to upper income level folks, right? That's what people to understand. That's how the main market works. And the reason why
Right.
is because the reason why there's two markets, because I know people are going to counter saying, well, we deserve the the same main market. It's like, no, you don't,
Right.
because you're not going to be able to understand as much as they do, because that's not I mean, I'm not saying everybody, but I'm
Right.
saying, you're not going to be able to spend as much time or your focus or have the intel or knowledge as they do, and that's why they're the experts, and that's why they do what they do.
Right.
And and two, it's a lot of work. I mean,
Yeah.
because when you're going to do an IPO or you're going to buy a large amount of shares in a company,
Hmm.
you have to do your homework. You have to
Yeah.
see, who the management is,
Mhm.
how they're doing, what activities they're doing at all levels. Not only management changes, but what investments are they making in R&D? Are they, what's their growth going to be like? What they're
Mhm.
doing in innovation? How are they participating in the community from an ESG standpoint now, which is a big thing, which is environmental, social, and governments, right? Or good, sorry. And and also, are they in trouble at all? Are there things that are gonna get them in trouble, like let's say antitrust, we talked about in our second episode. So
Oh
there's
yeah.
so many, factors involved, and the reason I just wanted to jump in there was I just wanted to make sure our listeners know, like, yes, we're going to talk about all this quote unquote boring stuff, which is not boring to us, but they need to really listen in, because we're trying to explain to them not only the power of owning a stock, but how they can learn how it works so that
Right.
they can do better. Because everyone starts from the bottom. Even these
Hmm.
institutional investors, a lot of these top investors didn't start at the top. I mean, some may do because of privilege, I guess you call it, or
Yeah.
because
Daddy money.
yeah, daddy money, but a majority started from the bottom, worked their way up, just like Warren Buffett,
Sure.
Carl Icahn. All these folks started some Ray DeLeo, Steve Schwartzman. All these guys started from somewhere, and
Right.
and then with the secondary market, again, this is why the free market's great. There's also a secondary market for everyone else. So for folks that say that the markets are not uh, inclusive and
Hmm.
it's very limited, that's actually false. It's
Well,
actually
yeah,
very
absolutely.
inclusive, and there's multiple factors there, but it's all inclusive. Anyone can participate. And
Hmm.
if you want to work yourself to the main market, then work hard, invest well, collect that wealth, and then become the big dog in the main one. So I'll
Right.
leave it at that, but I just wanted to make sure people understood why we're doing this episode. It's not just because to inform them on stock, but then we're going to talk about the factors involving it and why it goes up and down and how it affects them personally in their portfolios.
Sure. And that's the thing. Like you don't have to participate in IPOs or run a hedge fund or whatever to make wealth for yourself and for your family. I mean, there are a lot of uh, famous and well-respected investors who have never invested in IPOs, and that's fine. You have to know the rules of the game, right? And one of those rules is that when you are one of the little people, and let's face it, if you're not working on a trading floor or you're not working in the pit and you do not have 3 or 4 zeros or commas in your net worth, you know what? You're one of the little people. Uh, the the data that you're getting, because you have to make decisions based on information. Well, you as the retail investor, those data are aggregated and they're delayed. So you're not seeing live updates, regardless of what you see on Google Finance or Robinhood or whatever it is that you're looking at. You're not seeing the millisecond, nanosecond changes in stock prices. Those things are aggregated and those are delayed. Okay. Part of that delay is because the traders who are on the floor have the most advantage in terms of speed of information, and the ones that are housed in New York on their computer farms, they're the second most advantaged in terms of accuracy and real time of information. But you don't need that to make smart investment decisions. Probably one of the most critical things that you need to have is an awareness of reality. Okay, a stock's price most of the time has absolutely nothing to do with what the stock of that company is worth. Okay, what worth is going to depend on your analysis, and what you believe, what you value, and your opinion of what the company is doing, what the management are doing.
I also bet a lot of people in general don't even look at the market caps and the financials, even the basic financials of companies when they buy stock. I
Oh,
guarantee you,
sure.
because I've asked some of our friends before. It's like, why do you own Amazon? Why do you own Google? Why do you own
Right.
Walmart or McDonald's? And a lot of them say, well, I really love the company. Which, yes, that's a major factor,
That's
as
an
you just
important
said.
factor.
Right. I mean, belief and trust in a company and knowing that they'll be around for a long time and they're continuing to innovate and push forward. That's that's a major part of it. But I think a
Right.
key part too is they need to understand to do just basic research and
Right.
understanding of their financials, right? From
Well,
quarter to
sure.
quarter, year to year, what's their P&L, what's their growth pattern, and all that's public. And you don't have
Yeah.
to do like a full audit. I mean, let's be honest. You can just look at
Well,
the
they won't let you
basics.
anyway.
Well, obviously, but yeah, unless you're me and you who get proxy reports and Intel, every quarter because we're large shareholders. But um, people just need to understand to do the basics, and it's all out
Right.
there. You can go to Bloomberg.com, you can go to Yahoo, TD, even your
Oh,
financial
yeah.
advisors.
Yahoo Finance.
Yeah, and people should ask their advisors whether they're from Charles Schwab, Fidelity, TD Ameritrade, wherever. Ask
Right.
your your bank. Ask them like, hey, what in the past 2 years or in the past 4 quarters, what's been their basic financials, their growth, their revenue, and their patterns, increase, decrease, and all that, and then just
Absolutely.
keep yeah, and then just keep doing research. I mean, that's
And if you
that.
ask one of these people, like at TDA or at your bank, or whatever, and they cannot give you an informed, logical answer,
Fire them.
you may, yeah, you may want to take your money somewhere else. I mean, the
No,
problem
not
that
May. Do.
fine. Well, I was giving them the benefit of the doubt,
I'm
uh,
not. It's their damn job.
but you mean you're right, man. And one of the big issues is that you talk to people like, well, I recommend stock X. Now let's pick Amazon because I'm assuming everybody knows who Amazon are and what they do.
I hope so,
Well,
unless you're a native tribe.
right. It was like, well, I don't want to buy Amazon. Well, why not? Well, the stock is so expensive. I was like,
Oh
okay,
god.
first of all, most brokerages, especially the ones on your phone, are going to offer fractional shares. So that's not an excuse. But second of all, the how expensive or how cheap a share of a company is has absolutely nothing to do with what the cost of the share is, right? So if you look at, theory of pricing, there's basically two main branches. There's what you call the efficient market hypothesis, which is let's not ask any deep questions, because whatever you see on the listing, that's the company's value at any given time, regardless of fundamentals, regardless of anything that you can math out in your computer, or you have the intrinsic value theory, which is what people like Buffett subscribe to, which the stock price you see may or may not be what the company's actual value is, right? Because the whole
Right.
thing with intrinsic value is if the company kept producing at its capacity, uh, how much money is it going to make and how long can it keep making that money? So you see, stocks like Amazon may actually be very cheap compared to something like Tesla, which we've seen take a beating this year. You can make the arguments, at the end of the day, the only thing that matters, well, for us anyway, but one of the most important things that matters as a shareholder is what is the company doing with its capacity? How much money can it make? And can it turn all those millions or billions or whatever, however many assets it has, can it turn that into a profit that I, as a shareholder, can benefit from? And if the answer is no, or I'm not sure, well, then the price doesn't matter because it's not a good buy for a stock, period.
No, that's definitely spot on. I mean, you bring up Amazon. That's probably one of the key things that people really need to bookmark is what you just said. It's
Sure.
it's the company's true value on regardless of fundamentals, and Amazon's a good example because yes, it may be what 3,000, $4,000 a share now or something like that.
Oh, a hell of a
S-
lot.
Yeah, something
More than
like
it was
that.
when they started.
Right, and a lot of people say, "Oh, that's really high and all," but if you look at again the true value and the projected how long can they sustain this, the reason why it's so high and it's such a great investment is because there is no limit right now because there has been no real threat to Amazon's growth.
Right.
And they just generated a profit, what, 3 years ago, which is significant. Two, look at where everything they are. Yeah, yes, they have the e-commerce hammered down, right? They're
Hmm.
expanding into entertainment. They're expanding their
Right.
platform in general, and their mission is to automate and to simplify human life.
Right.
I mean, they started with books. They went to e-commerce. Now they're entering with movies and entertainment. Amazon Web Services. That's one of the things I think a lot of people don't understand. That's a huge
Hmm.
money generator. Their
Yeah, one of the
cloud
world's
business.
biggest IT service providers.
Yeah, exactly. So and they have countless other services and products that they're continue to not only make better, but to add on to, like their
Right.
acquisitions that they make, and that is what people really need to look at. Is just that is when you invest in a company, whether it's I don't care, it's one share or a million shares you buy in them,
Hmm.
where are they headed, regardless of fundamentals, as can you believe they will continue to grow and last for a while? And I
Right.
think a lot of people can say Google,
Yep.
Amazon, Walmart, McDonald's, because let's be honest, McDonald's survives no matter what. I don't, when economy gets worse, it's affordable. When economy is
Yep.
great, it's great drunk
It's
food.
still affordable.
Right. And it's that's what people have to look at. To me, that's just the fundamentals of investing. But that's just to me.
Right.
Is two things. Is one, can you actually afford it?
Well, yes.
But B, when you look at the company, do you actually believe in it, and do their financials make sense? And are they going to be surviving in the current and future environments of the whole world?
Right.
Politically, government, consumer demand, consumer wants, and other factors like cost of goods sold and all that. So that's
Yeah.
why I think it's such. I hope this is really informative to investors, and that's why you bring up Tesla. We had no belief because what is the trajectory, right? Are they? Yes, they're producing these cars and all that. I think a lot of the hope is in the batteries, but have
Right.
they really shown progress in that? So there's a lot of concern that so that's why the stock is rocky, unlike
Right.
other stocks and companies, because you just don't know where they're headed.
Sure. Well, I mean, same things like, Tesla, there's a lot of criticism that, the real money maker for them is selling off the carbon credits, and that now that we have more electric vehicle manufacturers entering the fray,
Right.
that's going to become less and less important because the more sellers of carbon credits you have, the less of a premium that you're going to be able to charge for them. But you're right about belief. Ultimately, at the end of the day, whether stock is overvalued, undervalued, correctly valued, whatever, it's the price is always going to converge on what the correct price should be. And what I mean by correct price, it's always converging to a value that is determined pretty much almost entirely by the company's ability to continue making money and to continue earning a profit. So, like, the
Yeah.
bill is always going to come due. Okay, hype can prop up a stock for a long amount of time. Short squeezes and belief about the future. There are a lot of things that can drive a price up to what you can consider unreasonably high levels. But at the end of the day, that is not sustainable. Okay. There's only so many memes you can make about a company before people start realizing, like, yeah, okay, this is funny, but I'm not getting a return, or my volatility is through the roof. Like, this is not acceptable to me as an investor, right? The bill's always going to come due, period.
That is spot on, and you and I always talk about that in not only public investing in the public markets, but in private markets. At the end of the day, the fundamentals and the principles of finance always corrects itself, and will never be you'll never lose those principles because they'll correct. And no matter how hyped up you make a company,
Hmm.
and no matter how much you can hire and pay a lot of money for marketing and try to hype it, have a leader like let's say Elon Musk to talk about this, who's a genius. But when it comes to finance, reality settles in, like you said. And you see this all the time in companies. And also, it can be reversed. It can be, hey, everyone's talking down about a company, but if you look at what they're doing, their progress and innovation and the changes they made in management and other sorts, and they're cutting costs and now they're starting to make more profit, that can also be turned around saying, "Hey, this is a undervalued stock." So
Right.
it can go both ways. And to me, when you always see overhype, is when you start seeing a problem, because
Sure.
I always say never go with the popular crowd, because it'll
Right.
come crashing down, because that means everyone's buying into it, they're hyping it up, and that's when you start going, "Oh, maybe I should." That's when you should take a step back and look at the realities first. You can still buy into it if it's
Oh,
still
sure.
fundamentally right, but make sure you're not getting caught with the wave of hype. And
Right.
the example I bring back to the undervalued. You remember I talked about buying Ford,
Oh,
and
yeah.
Nvidia,
How
and all these
everybody
companies.
laughed at you for it.
Yeah, they laughed at me, but I said, "Look, do you not see the management changes they made? They hired a CTO, and they hired and they stole some talent from really forward-thinking companies, and they really started to make key cuts and changes and push forward innovation."
Right.
And I bought them at what I think like $5, $6 a share, or
I think it
actually
was like
lower.
$6 a share or something like that
Yeah, now
when
it's
you
at
went in.
15, $16, and
That's
the
a good
reason.
return.
Yeah, so it's returned because and when the Ford truck came out, I was like, I told you,
Hmm.
they were working on something, and Nvidia
Yeah.
was the same way. People thought Nvidia was
Right.
too expensive at 300, and I was like, no. And I'm like,
It looks
but
pretty
you
cheap
understand?
now.
Yeah, now, yeah, and again, you look at it, right? Not
Hmm.
not Nvidia never hyped themselves too much. They focused on the fundamentals. They created great product. They kept their P&L on par, and they made the right investments. And they produced products that people wanted and needed. That's going to last for a long time, because
Right.
their timing is excellent. Because gaming is not going to go away. It's still growing rapidly. Computing and innovative technologies like artificial intelligence and chips and all this require what they produce, so
Hmm.
they're going to continue to build value, and I still think it's undervalued. But
Oh,
hopefully
yeah,
those,
you're probably right.
yeah. So hopefully those are two really good examples of that. And
Sure.
that leads us to what's causing this whole mayhem. But before we get to that, I just really hope our listeners understand what we're talking about here. The recap is, don't just look at stocks as just a number and don't go, well, which stock should I buy? You should rephrase it and start changing your mindset to, which companies do I believe in? Which companies do I love and understand, or which industries? And then start looking at financials and what you want to invest in. So you have 10,000 to invest. Start thinking, okay, I really love these companies. Let's take a look at them, right?
Hmm.
And do your homework and all that. But that's what people should do, and then start looking at the future and analyzing, will this company last? Are they making the right decisions? And when you go to retirement, are they going to still be there and do well,
Well,
right?
there's a reason why, Warren Buffett was famous for saying that the whole goal of investing is to find good companies that are trading at a discount. People always say, well, how do I know that? How do I know the management? Well, why do you think Buffett reads every single report cover to cover and then said, "Oh, well, these are the managers. Let's go see what they did somewhere else. Let's go see what their past performance is." Like, if you're willing to do the work, and yeah, okay, I'll be the first to admit, I love finance. I love equities research. I love all that boring stuff that
You
people
and me
can't be
both.
bothered with. But even I find some of these reports to be awful to get through, right? But
Right.
you have to ask yourself, like, if you're not going to put in the time to read, 300 or 400 pages, some of these get to, you're not going to put in the time to you what do management actually believe in, because they're going to show you their beliefs with action, right? And history has a horrible habit of remembering everything you did. Okay, if you're not going to put forth the effort to do all that, you know well, what does that say about not just your attitude toward investing, but what is your attitude toward your own money? Like, you're if you can't do the research and you can't bring yourself to look into these companies and these managers, and all this information is free, by the way. Like, it costs you nothing to download a PDF. You
Yeah, because
know,
they're legally required
right? They
to
are
provide them.
legally required to
Yeah,
disclose all of
public
this.
companies. Yeah,
Yeah,
public companies are required. Yeah.
well, I would argue you're not actually caring that much about your money either.
Yeah, I mean that is totally spot on. And again, everybody, this is not investment advice. We're just providing our feedback and knowledge, and accurate facts and information about how stocks work. But anything that's advice, please, on the record, this is
Do
not
it
investment
yourself.
advice. Yeah, but to add to that, and a final point before we move on is not everyone is meant to truly invest. And I think people need to
Sure.
understand that. It's like you need to understand who you are, what your needs and wants are in your time. Because end of the day, that's why you have 401ks, you
Yeah.
have savings, you have financial advisors to put in ETFs and retirement accounts. That's fine. Not
Right.
everyone is meant to do that, but if you want to invest, then you got to take it seriously. And again, you can dabble and learn and do whatever, but if you truly want to get serious, you got to really, like you said, do the work. And,
Right.
and 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 again, it's totally fine if folks don't want to do that and they just want to, go to Charles Schwab and TD Ameritrade and
Yeah.
Fidelity. That's why they exist. They
Right.
exist because not every person, the majority of the world of the population is not meant to do that.
Right.
And that's just reality. And again, there's nothing wrong with that. Just trust what you know and what you don't know, and go from there.
Oh
That's
yeah.
why you and I do that's why you and I do what we do, on the investment side of our business, because we're freaking nerds when it comes to that.
We do
I
have some
literally,
head damage.
literally on
I'll
my
admit that.
literally on my desk right now, I have 50 proxy reports from public companies, and I think about 15 or 16 financials and pitches from private companies, and I'm sure you're the same way.
Oh yeah, most of them just end up in the round file. But no, you got a point. If you don't have the time, energy, or desire, there's nothing wrong with having somebody else manage your money, provided that they're a fiduciary, so they're legally required to act in your best interest, not just sell you whatever crap gets them
Yeah, make
highest
sure.
commission.
Yeah, make sure
Uh,
it's not Uncle Joey or something. Make sure it's someone that's registered and from a
right,
reliable, a financial services company like a Charles Schwab or a Bank of America or something like that.
right.
Please.
It's not Uncle Kenny's meth shack that doubles as a cook lab on the weekends.
Right.
But yeah, no, you're absolutely right, and I think that leads in fantastically to some of the issues, some of the mayhem that we're seeing here
Speaking
with
of
the
Uncle
markets.
Joey, speaking
Oh
of
boy.
Uncle Joey, apparently there's a bunch of them on Reddit.
Well, it's funny you mentioned that. Obviously, the GameStop issue is kind of old news by now. Uh, Honestly, that the moral or philosophical or even legal implications of the Reddit boom with some of these meme stonks is not really relevant, I think, from a financial mechanics standpoint. This trading frenzy and these uh, accusations of market manipulation, which is not that's not something you can just write off as legislators being useless boomers or whatever the cool kids are saying these days. Like that is a serious crime, and you do time in a real jail for that. You don't go to Club Fed. Uh, but a lot of this stuff uh, is driving what I think is some of the irrationality in the market. You see that with SPAC boom. Now, everybody these days, I hope, has heard of what a SPAC is. Just get a pool of money together, go find a target to buy out, and that's how they go public instead of a traditional IPO route, which can take months and a giant pile of cash to get done. So, in theory, SPACs are fantastic, but you have to look at the history, right? Remember what I said? History has a nasty habit of remembering everything you do. In 2019, the whole year of 2019, there were about 59 SPACs. And this comes from a source called SPAC Research. Wonder what they do. But in 2019, 59 SPACs. Okay. 2020, literally 1 year later, despite the pandemic, 248 for the year.
Mm-hmm.
In 2021, the first quarter of 2021, and we're not even through the damn year yet, 300 plus SPACs.
Right.
The amount of money that they raise, goes from 13 to 100 billion in that short amount of time. I have to ask a question: how many of these companies, at the time that they got SPACed into the market, how many of them actually were ready in a maturity of corporate life cycle sense? How many of them were ready to actually be public?
Right. Taking a step back to the meme stocks, and actually relates to both. I think both meme stocks and SPACs are just, I think, people losing their damn minds, being locked up on a home for COVID or something. Something happened.
They didn't
Maybe
know
there's a
what to
different.
spend their stimulus checks on.
Yeah, I don't know what's going on, but there's just so much going on between the both. Not only the retail investors with meme stocks, but also with institutional investors, and I think
Mhm.
that's creating a lot of tension between both, right? And going to the meme stonks, as we call them, right? That one, I get where these folks were coming from, right? These are all secondary market folks who had a
Yeah,
little bit more knowledge, I guess, in certain ways about how the markets work. And they felt tired of, them being at a disadvantage because of the delay, like you said, like the delayed information and timing and prices, as
sure.
well as I guess they want to woke the market. I don't know. But, end of the day, I think what we saw with that is a collection of folks who, and I'm just going to say it, who are wannabes, who, who weren't able to, I hate to say this, you know,
When has that ever stopped you?
yeah, you and I talk about this all the time. When you want to do something, you work hard for it, right? You
In
know,
theory, yes.
I'm not saying all these bankers and private equity guys are saints. Many of them aren't, right? A lot of them are a bunch of cocky, coke smoking folks, and we know a lot of them snorting folks. But if I feel like a lot of these meme stocks folks that we're talking on Reddit and all that, either either always wanted to be in finance but never worked towards it,
Right.
and are and are trying to have a movement that I just really don't understand why there needs to be like. I get people are frustrated with the financial system. I totally
Sure.
get it. And I totally get the retail and the common folks uniting together to
Mhm.
make a difference, but you still need knowledge.
Well, I think,
I
I
mean,
don't know.
I mean, I know I kind of dragged that on there, but I'm trying to, relay my thoughts on how this is. I mean, I think you kind of get where I'm coming from with this.
Well, yeah, I
That's
mean, I get the theory. I don't, I mean, I love some of the Reddit forums, that are not gonna be mentioned by name. I'm sure everybody's heard of them by now. Uh, I have to I have to ask myself, like, yeah, there are a lot of users on there who say, I work for, some bulge bracket doing this, and they'll post screenshots of, information sources that I certainly don't have. And it does make me wonder, well, are they actually telling the are they actually a floor trader? I don't know. I don't want to call them out and, incur the wrath of the internet. But you are right. I mean, personally, from my own uneducated, short-sighted mentality, when I go on some of these forums and I see the gains porn of, I mean, there was one I saw the other day, like somebody, they posted a screenshot of their brokerage app, with the all-time flag selected, and you can clearly see the dates. They literally turned like 200, I think it was like $200 into 20 grand, or some huge amount of money, and a week, or something ridiculous like that. Like, I'll admit, that to me, kind of, that makes me feel like, damn it, why didn't I do that? I'm at least as educated as, this random person I've never met on the internet, who may or may not have photoshopped that image in the first place. But I think that kind of mentality, A, makes a feedback loop, but B, if you read these comments, and again, the usual internet disclaimers apply. I don't know if these people are telling the truth. I don't. It
Right.
could all be a stock puppet, server farm somewhere. Like, I don't know. I don't really care. But it is kind of a mission, for a lot of these people, to kind of get one back. After the '08 crash. Like, a lot of the people that got to
And
watch
by the
their
way, I
parents.
don't blame them. And I
Oh
don't
no,
blame them
I don't
don't get
blame
me
them at
wrong.
all.
Yeah, and don't get me wrong, I don't blame them one bit at all.
Sure.
I get where they're coming from. It's just I'm just trying to still wrap my head around it. I mean, I get what they're doing, and I wish I I mean, I guess it showed the true power of what can happen if retail investors united. That's a
Absolutely.
that's a positive. And I think two, it started to raise more awareness of how investing works. And I think it
Right.
educated a lot of people on how these markets work. That's a positive. Three, I think there were a little, speaking of activist investors, they kind of did that. They kind of pulled off like a bunch of Carl
Yeah.
Icons actually, because you look at GameStop, they're
Yep.
they were a company that it was dragging ass,
Oh
and
yeah.
you know,
$6 to $400 in a few
I'm
months or something like that.
well, I was surprised they still existed. But the problem is two parts, right? Two parts on that. Is one is, they drove GameStop up, but GameStop didn't deserve it. I get they're trying to be activists to drive it through, but true activist investment, it means you're trying to help that company change for the good, which means
Okay.
which means buying more shares and getting control so that you can implement change so that that company can progress forward and being a better company. So for them to drive up the stock price from $6 to 400 made no sense, because that company did not deserve to be valued at $400 at all. So
Well, we'll see.
I guess that was really my problem. But at the same
Okay.
time, as we know, the company did implement changes. They got
Yeah.
the Chewy CEO, right, to come over. I think
Mhm.
they hired a couple key people from Amazon or something to move
I
over.
think so, yeah.
So I mean, let's see. Again, for me, I'm just so principled when it comes to financials. I guess you can call me a Warren Buffett wannabe, but I believe in long value investing. I totally do. But I also don't blame them. And yes, I do stick to my comments about how a lot of these are wannabes. But the purpose of what they did, I don't blame them.
Right.
Whether it's because the '08 thing, or they want to create change in the markets or whatnot. And I don't blame them. And two, these institutional investors and these markets had it coming, because although we love the free market, we believe in capitalism and all that, but the problem is so many of these people are a bunch of hotheads who think they can get away with anything,
Mhm.
and they want to play the game, but cheating their way out. That's the issue. And I guess it's a double-edged sword, I guess I have to say. And SPACs, like you said before I finished here, SPAC is a great example. We have a
Right.
great institutional investor friend that we love and adore, and he was one of like the godfathers of SPACs. People realize SPACs special purpose acquisition companies, they have been around for a long time. People don't realize that. Like that is nothing new. It just started to get hyped up. I think it really started with the Chamath guy, the investor from Silicon Valley, who's
Mm-hmm.
had plenty of failures. So I don't know why the hell people listen to him. But
Because he
they
cuts a good interview, Vin.
yeah, I guess he does.
And
And
he
yeah,
yells at people on the fundraising calls and still gets their money. That's a
yeah.
talent I need to perfect.
And I bet he's going to call me out at some point because we actually know each other. But
He
you
could be
know,
our next guest.
there you go. But you know, SPACs were really meant for real companies who meet all the key criteria, right? They meet all the financials that are needed. They actually do have a projected growth pattern, a path, um,
Right.
and they just simply wanted to get listed at a more efficient, effective way
Right.
than go through IPO. Because people don't realize IPO is a vigorous process. The roadshow alone
Oh,
is
it's a
vigorous.
nightmare.
The roadshow to get the to pitch to all these folks and investors and the
Mm-hmm.
regulatory, it's a complete shit show. Now, I'm all for the IPOs, but some companies I think are appropriate for SPACs. But
Right.
to see it being abused now is a problem. Like
Right.
you said, there were what 59 SPACs in 19. It shot up to
Mm-hmm.
248 in
Last
2020,
year.
and this
Yeah.
and this year alone, there's 300 plus. I
Right.
guarantee you there are not 300 plus companies ready to go public. And that's what
Right.
scares the hell out of me is you're seeing companies that aren't generating real revenue. They are, for example, we won't name the names, but whether it's the flying taxis or these electric vehicle trucks, great.
Oh, yeah.
You build a concept, right? And you need capital to turn it, make it actually turn on and drive and to deliver.
Right.
You're really in Series A. You're not supposed to
Oh,
be going
absolutely.
public, right? So to
Absolutely.
me, that's what offends me about Chamath is that you see a guy from Silicon Valley who understands the process of how a company works. You see Wall Street who understands how companies work,
In
and they're all
theory, yes.
buying into the hype that we talked about earlier in the
Yep.
show. And these guys are highly intellectual. Well, I guess so. Highly intellectual financial experts that are doing this, and it just disgusts me to see that. So that's why I think I just have a problem with both the meme stonks and the SPACs, both the main market institutional investors and the
Mm-hmm.
retail investors, because everyone's losing their damn minds and are forgetting the core functionalities and the principles of what the financial markets are, and it's opening the door to God knows what down the road with regulations, with
Oh, yeah.
further, with further criminal acts or terrible decisions from financial folks, right, from investors and fund managers and all these people, and what God knows what's going to happen with the future stonks, what's going to happen there, and how because people are losing money left and right, and the market's
Right.
going to correct themselves, like we said, it's going to correct themselves. But
Oh, sure.
and I think it's going to be real bad because you have both the institutional and also now the retail all going haywire.
Well, yeah,
So
and you're right about
yeah,
the early stage companies, Van. The ones that produce a concept that are not yet that are pre-revenue or that are barely in revenue. There are already funding vehicles for those organizations, right? It's called venture capital and private equity.
yeah,
Maybe some of our listeners
family and
have heard
friends.
about. Yeah. Maybe some of our listeners have heard of Silicon Valley. But the point is that love or hate VC and PE, the fact remains that when you are starting something new, especially if it's something revolutionary, you're going to lose money for a while. Okay, and everyone knows the hockey stick projection of value and of money inside your company. When you are trying to go from concept or low rate initial production to grow to be an electric Ford, right? And I'm sure a lot of these companies would kill to have not just a fraction of the market share of a company like Ford, but also the infrastructure. I'm not sure people understand, but the
which took a
footprint.
century to build.
Yeah, well, yeah, man. But the footprint, the literal amount of space and stuff that you need to punch out 25 million trucks in a year is astronomical. Okay, but the problem is normally when you're a small company, you'll get strung along with private equity money, and they'll subsidize your losses until you get to the point where you are now self-sustaining. And then when you're self-sustaining and growing and show that you know what the hell you're doing, okay, that is when they reap. Okay,
Right.
that's when they sell you. That's when they take you public. That's when they get their, huge ass returns and buy another mansion on Sand Canyon. Okay, that is the path forward. That's been the way for a while. But my problem with SPACs, or one of my problems with SPACs, when you go public too early, uh, and I'm not talking about companies like Palantir, but yeah, full disclosure, I do invest in them. I'm not talking about
It's a great
companies that
company.
have yeah, not financial advice, but I like the stock. Uh,
Yep.
I'm not talking about companies that are functioning and already operating and just need, time and money to grow. I'm talking about companies that don't have a product working yet that would have been funded and subsidized with private money previously, historically. When you take a company like that public, you are offloading that subsidy onto the general market. And it's not, again, nobody is gonna
That's a
shed it.
great point.
Well, nobody's gonna shed a tear if billionaires lose a little bit of money or if they can't invest in the next hot thing. Okay, let's just be honest. Whether or not they work for it, nobody's gonna care if the mega rich can't benefit from going public too early. But the problem is that you're not dumping uh, that subsidized loss on the mega rich because they're also smart enough to not buy into it in the first damn place. You're dumping it onto the people who may not be able to afford it. And you can argue, like, well, they should do their research. Yeah, I agree. But people also invest, like you said before, in hopes of a better future. And while dumping that subsidy onto the retail investors who may not be able to bear the loss is certainly legal because we have hundreds of examples of companies that got dragged into the public markets before they were ready or even deserved it. Just because it's legal doesn't mean that it's something you should do, right? So I think a lot of these SPACs are not just ruining the company that they take public, because I'm not sure if people are aware, compliance and reporting is a hell of a lot of work, and it's a huge expense that companies now have thrust upon them, probably at the worst possible time. But you're also screwing over the retail investors who may have made a better, more informed decision if you were not SPACed.
Yeah, I mean, everyone's playing a dangerous game, and that's a great point you made. These companies that are being listed by SPACs, who don't really qualify, being dumped to retail investors, and God knows how the trickle effect is, right? Do these
Oh
ones
yeah.
show up in, funds? Do they show up like who's making
Oh yeah.
decision? Is your financial advisor buying into that hype?
Right.
What's the so it's really a dangerous network effect of games that they're playing. And as we again said earlier in the show, the markets have a way of correcting themselves, and
Violently sometimes.
I think it's going to be really violent coming up because again you have the meme stonks, right, which
Hmm.
financially don't make sense in a lot of these things that they're investing and hyping up. And then you have these SPACs from the institutional investors which trickle down to the stonks. But another scary thing that has happened the past few weeks, again with Shamath, with Clover Health, he actually took advantage of the meme stonks to drive up the one of the SPACs that he took public. And
Oh
now you're
really? I
entering,
didn't know that.
yeah, and now you're really entering a dangerous, dangerous game now, because you have someone like that, who's taken a company public, Clover Health, which, I to be quite frank, I didn't dig deeper into the company, so I would have to do research on Clover Health, but I have heard of them. But it shot up like 80, 90% or more.
Hmm.
And he leveraged the meme stock folks. So now
Yeah.
you're playing that game. It's just it's getting really scary, and in a territory that we've never seen before. And
Right.
and 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 don't get me wrong, this is a long time coming, because a lot of these larger institutional investors, private equity folks, all the years that led up to this, it's kind of a long time coming. And
Sure.
I don't know if this is going to be Armageddon coming up, but there's going to be a correction because of all these games being played.
Right.
And not to mention, I'll jump into it now. We talked about it a few days ago,
Hmm.
when but they said there's we can't say their names, but there's a particular very large retail institutional bank that is buying up houses, right, at
Right.
40 to 60% above market price. And please
Hmm.
correct me if I'm wrong. The way they're playing is because of the way the feds are artificially manipulating the interest rates and printing 20% of cash, of the US dollars within the past 12 months.
Right.
Had to stick that in there. So they have to make money on these mortgages, right? So they ended up buying residential homes at 40 to
Hmm.
60% above marketplace to sell them, because everyone's still buying them for God knows
Right.
why, and selling larger mortgages, because people don't realize how the mortgage world works. It's a big trickle effect, as
Right.
as we saw in '08. Once you push the domino down, it goes. So now they're trying to raise those dominoes, but the fear is go back down. So the whole world right now, as you and I have been talking about financially, it is a shit show
Oh,
because of all
absolutely.
this.
And the
And I
housing
see
thing
why,
is,
and just real
yeah,
quick, I see why Warren Buffett and other major, similar investors are sitting on the sidelines.
hoarding cash.
Yep.
Uh, no, I mean the housing thing is terrifying to me. You know, you're if you blow up your portfolio because you don't know what you're doing, like, okay, well, you know what? Lesson learned. Next time, don't be stupid. Make better decisions. But the thing with the housing markets is, it's not just the massive uh, shadow bank, but it's pensions. It's a lot of other financial institutions, and it makes sense from one perspective because yeah, okay, prices are skyrocketing. People are paying above asking for a house just to get the house. And you can debate whether or not that's right or wrong. But when you get institutional money involved, there's only one reason for an entity, whether it's a person or Bank of America, to make an investment. And that is that you're going to buy an asset now in hopes of turning it into more money than you paid for it. Okay, so with mortgages, it's a little terrifying because if you screw up and you find yourself upside down or in a bad position on a mortgage, it's not delete the app and go back to your day job. It's you're out of a place to live,
Right.
right? And the problem that I see is the housing boom cannot go up forever. Okay, like just last month we had a 5% inflation increase, and you can argue that that's due to the economy opening up. No, not necessarily. Okay, because if you look at historically, the past several years of inflationary pressure has been more or less flat. A lot of that is due to the benefits of technology. Uh, Tech makes everything faster, better, more efficient. Uh, but the problem is that we are in a very low rate environment. Yellen's already said that yeah, we could probably absorb 1.6% increase in interest rate. Inflation and interest are inversely correlated. So, again, it's hard to shed tears for billionaires, but when the boom ends and the bill comes due and the Fed realizes that, oh crap, that average inflation rate targeting maybe isn't such a hot idea. And like you said, we've printed 20% of all the money that we've ever printed in the last year. Maybe let's knock off this quantitative easing nonsense and jack the rates back up and kind of put the brakes on. Uh, well, what do you think is going to happen to all those people that bought in? And these, again, whether it's individuals or retail money, these people who bought into a house overpriced with the expectation that it was going to continue to rise. Well, okay, if you're one of the bulge brackets, sooner or later you're probably going to either write all that off or find some creative way of stemming the blood flow. But again, it's easy to say that, well, you should have done some work. But I think this is a cultural issue that we have a really, really short, pathetically and dangerously short attention span and memory when it comes to market forces. Like 2008 was 13 freaking years ago. That's not even a generation of time. And we're already acting like it never happened. And we're already acting like, oh, stocks go up forever. Yay, tendies. How stupid do you have to be collectively to continue making the same mistakes?
Yeah, that's what's the housing index you mentioned to me a couple weeks ago?
Uh,
The, the
it was
S&P one?
yeah, it's like a housing builder supply index or something, but I think you're talking about I think it was called the Collins rate. There's a
Yeah, yeah.
Yeah, it's an index that basically normalizes housing prices to, 1900 is, one or $100 or whatever you want to think of it, and then it's a way of measuring uh, the change in housing prices, uh, net of inflation. So everything's on a level playing field relative to what it was to this baseline. And in 2008 it was that index was like 200 or almost 200,
Right.
something like that. But now it's like 270 or something ridiculous like that. So if you trace it over time, again, this is one of those single indicator models. So take the usual disclaimers and cautions with that. But if you trace that over time, a lot of the big recessions and crashes, you'll see they are predated or almost, cotemporal with sharp increases in this housing price index. And that, now that it's the highest it's ever been and that it's accelerating in its increase. So it's not linear, it's curving up at an exponential rate. Uh, that to me is terrifying. Could it
Right.
be just a really good housing market? Well, I'm sure the realtors would hope so. And I also hope so because the alternative is going to be painful.
Well, history may not repeat, but it rhymes, as we know. And the interest rate, news and fear and the non-fear has been, obviously been one of the top headlines consistently. And I see where both sides are coming from. The ones that are, or I guess the other side of us would say interest rates are not going to be a problem. I get it, right? We just came off a pandemic. That's something that no one could have predicted. And, in modern history, this is something that's first happened,
Right.
something of this magnitude. So I
That's
definitely
the
see what
Case
you're,
Shiller Index. I looked it
right.
up.
There you go. Case Shiller.
CoreLogic Case Shiller Home Price Index for repeat sales.
Right. So I totally
Thank
get,
you, Google.
thank God for Google. Uh, but
Seriously.
But no, I totally get where the folks that say interest fears are overhyped. I see where they're coming from, right? Because because we're still coming out of the pandemic. There's a heavy amount of or a large spike in demand because now that places are reopening up, and people are traveling more and they're going out to eat more. So I totally get that, right? I totally get the uh, the interpretation that this is going to be temporary, and
Right.
that it'll fade off. But I think they're looking too much into, okay, that's the consumer price index, that's consumer prices, but
Hmm.
but inflation is more than that. As you and I know, it's not just the temporary spike of cost of products and goods. It can go back down, which I do see it flattening out, right? I do see that, but at the rate of how our government is printing money, and you look at the markets and the economy as a whole, there's still a issue, on top of just the whole temporary spike of cost because of demand, because you have
Right.
supply chain issues. You have the artificial manipulation of the market. You have the private markets going crazy with valuations. You see the IPOs, the SPACs,
Hmm.
private, the holdings is just, everything is practically just overinflated. And I think that's something that I think that's missing in a lot of,
Right.
in the narrative that you see about inflation.
Well, it's terrifying to me. Okay, the stimulus checks. Hey, I get it. All right, pandemics suck. People were out of work, and it's not just eh, there's a lot of media hype around like, oh well, people spent their pandemic checks on these stupid meme stocks and blah blah blah. Okay, fine. That makes for great media fodder. But let's face it. Let's face the reality. You had an assload of people in this country who found themselves out of work, who found themselves unable to pay for groceries or pay for rent. Things that you actually need to survive. I understand the whole point behind the stimulus checks. It was necessary, right? You can't just throw hundreds of thousands or millions of people out onto the street. At some point you're just chasing problems. You're like, well, let's not spend 2 trillion on this. Well, okay, well now you have a huge homeless problem because you don't have a rent moratorium or whatever. But at some point you have to say enough is enough. Okay. And this isn't a political show, but the stereotype of certain types of people wanting to solve all of society's problems with government goals is well known. Okay. We have the vaccines, the economy is reopening, stuff is improving, certainly a hell of a lot more than it was in March of 2020. Okay, stop with this capital injection. Ease off of that nonsense. Okay, some of this stuff is going to have to be paid for. All right, and you can't just keep proselytizing that you're going to tax the 1% and impose this global minimum tax rate everywhere, so there's not a race to the bottom anymore, etc. You're just at some point you're just forcing people to become increasingly creative to avoid your legislation. Yeah, the problem at hand is not that Bezos and Elon and everybody else are screwing the economy. Okay, the problem is that we're back on our feet, and you keep injecting capital into the economy. You keep adding fuel to the fire. What the hell do you think is going to happen? Like,
Yeah.
of course, we're going to have 5% inflation in a month. Are you kidding me? Why wouldn't we?
Yeah.
You're devaluing the dollar with capital injections. You're devaluing, you're going to devalue the labor market with the forced $15 an hour minimum wage. Okay. All you're doing with the QE mentality is pouring gas on the fire. And the only thing you're going to do with the minimum wage increase is either raise the poverty level to 30,000 a year, or you're going to force businesses to increase automation and increase reliance on technology to fire people that they no longer need to keep their expenses in check.
Well, I think strengthening the dollar is going to help the most, and I think that's what people don't get is the stronger the dollar, the better it is for consumers, right? And
In this country,
that
sure.
yeah,
And
so
that's all we care about right now.
right. So, so to your point, I think that's what is missing in the conversations is how can we strengthen the dollar? Because that's going to help the bottom line, whether it's $8 an hour, $9 an hour, $15 an
Mhm.
hour. For the stronger the dollar, and it makes things cheaper for the things you buy.
For
And
us,
if you
yeah, absolutely.
yeah, and if you look at things, it's getting ridiculous. Costs are going up like crazy. So
Yeah.
I do get that, and as the dollar gets weaker, it'll continue to get more expensive. And I've told you about this. Speaking of minimum wage, I honestly think there should be I can't believe no one's thought of this. Is figuring out an algorithm of how to correlate minimum wage with the current economy, right? Like that's that way you just can't debate about anything. That way you just can't honestly say yay or nay about $15 or $10 or $12. If you put
Right.
together an actually comprehensive, well thought out algorithm that calculates the current economy in the world for minimum wage, that's something I can accept, and that's something I think both sides of the
Hmm.
aisle could accept. To be honest, I mean, we're in 2021. We have some of the smartest people in the world, have great data. Why not figure out an algorithm to do that? Because
Oh, that's a good idea.
yeah,
Economists, drop us an email. I
yeah,
want to talk. That is actually brilliant. Well, did you hear about? I don't know where it ended up, but there was a proposal where the government was basically some legislator was proposing that the government establish what amounts to a trust fund for every American born and their time period of legislation, and it was I think it was a couple thousand a year that they would add to it into some managed fund for
right.
every single person that was born in this country, and then on their 18th birthday they would have access to said fund, kind of help them get like a head start in adulthood or something like that. But it's interesting because everyone bitches about what's it going to cost. What's going to happen when we have an automatically adjusting minimum wage, which is still an awesome idea. You look at the birth rates in this country, and you say, okay, for the next 18 years, and we're going to assume that so many million people are born. Then the next year, whatever that number happens to be, and you run this calculation through for 18 years, right? Excel's awesome for that. If you add up the total amount that it would cost the government to do that, it's a fraction of the trillions upon trillions that they doled out in stimulus checks. Again, I agree they were necessary to a point, but I think this your suggestion and this other discovery that I made with 5 minutes of work, it brings up the point that from a federal level, we have a very, I think we have a very constrained short-term mindset. Like, okay,
Yep.
yes, the Fed only has uh, two buttons to push to influence the economy. Cool, cool. That's how central banks work. I'm not recommending we change that. But from the legislative standpoint, from the legislative branch, I think you have a hell of a lot more freedom to be creative. And again, I understand that for many people, millions of people, numbers are real hard, but for millions others, it's not. Maybe you should listen to those smart people. That proposal right there that you said, I think is fantastic. And I mean, I think there's a lot of solutions that we could have in this country. I mean, I focus more on the taxation side of things because I think our tax system is stupid.
Hmm.
But we have all of this uh, fancy tech to show us ads for crap we don't need in ever more increasing efficient fashion. Why don't we apply some of that to a real problem, like how to ensure that people actually are able to survive without the typical, stereotypical, well, let's just keep throwing money at the problem and the rich will pay for it somehow. We'll make them.
I mean, that's just it. We're losing the ability to create creative solutions and implementing them. That's what's missing in our country right now is to be able to do that. And I do like that idea because as a more advanced civilized society with greater capital than others, because we're
Right.
wealthy nations, so we have the ability to do it. So why not do that? Put it into a fund for every child
Right.
born, and then when they are hit 18, bam. Now
Yeah.
that solves a lot of things from a standpoint. I mean, from a standpoint of, hey, our country is meant to give you all the rights and the platform to be able for you to survive, and then it's up
Hmm.
to you from there to take it and run with it, right?
Right.
It's like it's up to you to then make something out of your life. So I'm not opposed
Sure.
to that of doing a trust when you hit 18, you get some money, and then it shuts down all arguments about how government should or should not intervene to help
Oh
citizens
yeah.
with their lives. But at the same time, does that affect the motivation, the drive of people, right? Because when you grow up in certain situations and when you grow up, not having certain things and knowing what it's like to live a certain way,
Yeah.
those, that ignites a different fire in you. I know from firsthand experience. And we have friends that know, and there's some of the greatest stories of entrepreneurs and or just leaders of our world went through that. So,
Yeah.
it's kind of a mixed feeling about that, but it's definitely one of the better creative solutions than just
Right.
throwing money in the fire, as you said. And then with
Right.
minimum wage, I don't know why we don't do that. Both sides are bitching about it. It's like, well,
Uh-huh.
okay, stop bitching about it. Have a third party solution, which is create an algorithm that
Correct.
correlates with all the major economic factors that involves minimum wage so that people can earn a wage that is actually gives them the minimum amount to be able to survive and live not comfortably, but live and not suffer. Uh,
Right.
so
Well,
if
I
you
mean,
put in,
you're
yeah,
absolutely right. Hunger is a great motivator.
yeah. So if you put in 12 hours a day at McDonald's,
Hmm.
6 days or 7 days a week, you shouldn't have to, struggle to, rent at least, a studio and be able to feed yourself. If
Right.
you are, there's a problem, right? Because you're putting all the
Oh
hard
yeah.
work in. So that's why there has to be an algorithm, and it should be tied into the consumer price index. It should be tied into
Yep.
inflation. It should be tied into the value of the dollar and all these other factors. But yeah, I think that is something that's truly missing, and hopefully politicians listen to this and be more creative, but I doubt it.
Well, it's you know what I like about it, Ben? It's a solution that is rooted in something objective, right?
Right,
Now, yeah, people love saying, well, certain countries in Europe have universal basic income and free everything in the public sector, and et cetera. Why can't we? And I always love saying like, yeah, okay, but their tax rate is also above 50%, so that's why everybody goes to their free universities, gets a free PhD in a really high tech field, and then
right.
comes here to make money. But your suggestion, I love because unlike most of the other proposals, it's rooted in logic. Okay, like so you have Yang with the freedom dividend. Everybody gets
Don't
a
get me
thousand a
started with
month.
Yang.
I know he's your buddy, but
I hate him.
okay, everybody gets $1,000 a month, free and clear. Cool. Well, number one, how was that number decided? And number two, how does that increase or change with the reality of economics? Because I still maintain, if you just hand out money, okay, and it's not tied to anything, all you're doing is arbitrarily changing the poverty floor. Okay, everyone gets an extra 12,000 a year. Awesome. Sooner or later, the invisible hand is going to say, "All right, cool. Well, now the minimum to survive in this economy is $12,000 a year higher than was before. Okay, I get the 12,000 a year too. Awesome. But sooner or later I run out of purchasing power because prices have adjusted to the fact that everybody's $12,000 a year richer. Whereas, your approach I love because it actually has, it's rooted in some economic reality, right? And that's easy for
Yeah.
me to say because I don't have to program the damn thing.
Huh.
but
Right.
but I do think that I think you should probably pester some
Yeah.
people with that and see where it goes.
Hey, it's a start, right? I mean, and it doesn't have to be
It's a
perfect to
start.
begin with. Start with something and then grow from there. And I think this is why we have so many earthquakes in the financial world is because going back to the beginning, we have these meme stocks and these woke retail investors. We have the institutional and the experts investors, supposedly, and the hedge fund managers going chaotic with SPACs and even utilizing the meme stocks for their advantage. Uh, you
Right.
have you have all these debates about economic matters, right? From inflation to stimulus to other artificial manipulation of the markets, and then you have the debates about minimum wage. Are people able to afford at the current minimum wage? We
Hmm.
don't know because we actually don't know the true algorithm of what it is from minimal, right?
Right.
So and it has to be a better way of doing it. And
I
then at
agree.
least, yeah, so you have all that. And then not only do you have all that, but now you're having an increase in cybercrime and
Hmm.
all that. And then you have financial crime, more white collar crime, even. What happened to that Bill guy from Tiger Asia? I mean, I haven't heard of people about that.
Bill Huang or Wang, however it is. Yeah.
Yeah, that is.
Archegos or
Yeah.
Archegos. Yeah, well, so for one thing, I don't know if people who've been following this are aware. Uh, Bill Wang, before the Archegos implosion, had already been fined 44 million bucks for insider trading, and he was actually banned from one of the Asian exchanges for I think 4 or 5 years. So, that should kind of maybe have served as a warning. Maybe that's some Monday morning quarterbacking on my part, but
Right.
we do see a lot with some of these questionable institutions and people that like you said, history doesn't repeat, but it rhymes.
Hmm.
So no, so Archegos imploded. Uh, they were basically focused on what are called total return swaps, and one of the so a swap is basically anything that you are exchanging risk with another party, right? So Archegos was highly leveraged with multiple banks, each of which were unaware of the position of others. And so on a total return swap, the bank or banks are buying assets for a fund, in this case, Archegos. And, the fund can remain anonymous and, they don't have to have these underlying assets on their balance sheet. But the problem is with TRS is that you're transferring both market risk and also credit risk of the underlying. So one party is going to make payments based on a set rate, whether it's fixed or variable or LIBOR, so forth, the alignment of the stars, whatever it is that's in the contract. And the other party is going to make payments based on the return of the underlying stock, which could be an equity index, a loan, a bond, you grandma's apple pie, whatever the hell it is that you.
That sounds delicious.
I would love to trade grandma's apple pie. I'd be a
I would too.
billionaire.
Yep.
But at the end of the day, this swap, this arrangement, will allow you to have exposure to the underlying asset without actually having to own it. So I can, that's where the leverage comes in. I can shell out, $100 of hard currency and have exposure to $1 million of equities. For example, I'm not saying that's what actually happened because I haven't seen the swap contract. I don't really care. But what matters is that when the value of the underlying asset drops, you get margin called, which means give us more money, us being the bank, or we're going to sell the underlying asset to cover our losses. So far, so boring. This is just regular derivatives arrangement.
Right.
This is not exciting. what sucked with Archegos is that uh, Viacom and Discovery both took a huge hit. I think it was like 27% in Viacom and a similar amount of loss in Discovery. Uh, Archegos got margin called, and that margin call failed. Basically, banks got told to pound sand. It's a little more complicated than that. But the point is, the bank started selling off to cover the failed margin call. All said and done, some of the biggest names in the world, Credit Suisse, Nomura, Morgan Stanley, UBS, Mitsubishi, these names should sound familiar, ended up losing about $10 billion.
Ooh-wee.
Yeah, it's a fair amount of change. Archegos kind of imploded from this result. And again, hard to shed tears for billionaires, but at the same time, it's not. People have to remember, like this isn't, UBS is not Mr. UBS sitting in his office, playing golf with people's eyeballs or anything. These are huge institutions that hire and pay a hell of a lot of people, and when you take a bath of that size, the pain goes beyond top management not getting to afford a new yacht, right? This has
Right.
impact on real people's lives. So that's what caused all of the headlines.
So we have tectonic plates moving like crazy right now. You have,
Something like that, yeah.
because this can't be the only thing going on right now, because there's always
Oh no,
financial
no.
crimes. So you
Oh
have
sure.
this, going on. You have the retail investor wokeness going on, right? That movement. You have the private equity and the public markets going batshit. With
Right.
SPACs and with also just extreme overvaluations, and you
Hmm.
have the government as well artificially managing, I guess, the markets, right, with super low interest rates, printing a hell of a lot of money. So
Right.
I mean, what we're seeing is a perfect storm brewing. For what I hope not, but my gut feeling is a very sizable correction. Um,
Oh
you know,
sure. And
in the
like everything else,
markets,
this is going to end up on the legislative floor, right? We
right?
already saw that with so Allison Lee, who was the acting chairwoman of the SEC prior to Gary Gensler getting the job. After the whole meme stock insanity, you know, there are people asking questions, hard
Right.
questions, and yes, some of them did get dragged in to testify and defend themselves, but the problem is that there's a lot of questions being asked of people who have a lot of influence and by people who have a lot of power as to what the future of the American financial market is going to look like. Okay, so Allison Lee's open letter to the regulators uh, encourage examining, a lot of these practices that we kind of take for granted now in the markets, like payment for order flow, things like that, to kind of, in her words, ensure certain things that were consistent with best execution obligations.
Right.
Okay, and the thing with that is some of these suggestions are good. Some of these suggestions, I think, should be implemented. Um, is it stupid, quote unquote, stupid from a purely capitalist point of view to require the smartphone brokers to make sure that their clients understand what the hell they're doing? Yeah, okay, you can certainly make that argument, but when you have people who don't know what they're doing because they're not required to show knowledge, and they get leveraged up on options and then confuse what's actually going on and hang themselves, you know, that is a failure of the market, just
Yeah,
as
but
just
here's
as
yeah,
much as a correction is.
right. I mean, here's the thing. Like, you can't really. I mean, you can't really fully blame the regulators, right? I mean, a lot
No,
of
I
these.
don't blame the regulators, not
Yeah.
fully.
I mean, I partially blame the regulators, but we'll get to that. But you can't fully blame them because the folks in the private market, right, in the free markets, and whether you're an institutional investor or even now, I guess, a retail investor, right? They've had it coming now, and this is how history works. You're given a free market, you're given the ability to use your brain to do things the right way, and to make money in a I guess what we call a profit and purpose mentality, which is what this country is built on, and to abuse it for your own good and for your own greed, which is, I guess, human nature. That's why
Right.
you have these regulations. So
Absolutely.
so I understand where conservatives come from, because I agree that it needs to be a free market and it will continue to be a free market. But then I partially agree with the Democrats or the more liberal side, because you have to protect the consumers from the greed and from just human nature, taking a perfect model and screwing it up by
Right.
cheating and lying and all those sorts. So, that's just the way it is. And the more so I see another double-edged sword here, right?
Hmm.
The more people abuse the system, the more they cheat and lie, and the more they get creative and how they make their quick money, the more regulations uh,
Oh,
will
absolutely.
will occur. But at the same
Absolutely.
time, but at the same time, the more that regulators regulate without having to, the more creative these greedy, cheating, folks taking abusing the free market system, how more creative they get. So it's
Absolutely.
so there's a give and take here, and I think that's what is going to be an interesting thing to observe and to engage with, is how is this all going to come about? Because a lot of this is pretty new, right? With
Right.
SPACs becoming a popular thing now, you have the meme stocks movement. You have more creative structures of how people create these. I guess not Ponzi schemes, but just stupid swaps. Because you
Mhm.
think you will learn from '08, but apparently not. And it's just a very interesting dynamic right now. And to me, it's going to be a marquee moment over the next few years and how this is all handled.
Absolutely. And as much as I love to ridicule and hate politicians, I mean the simple fact is that you know in today's world, as has probably always been the case, but I haven't lived always. I live in now. Uh, if you are determined to do stupid things, there is always going to be an outlet for you to engage in whatever irresponsibility suits your fancy. And I mean, even something as minor as the so-called gamification of trading. One of these brokerages that I won't mention had like little confetti
Right.
flying down on the
It's like
screen
it's like,
whenever
hey,
you
this is real
executed an
money.
order.
This is
Right.
real money, not roller coaster tycoon.
Well, it's like, okay, you can probably make an argument for that, but the problem comes when uh, you get out of hand and the government has to step in and say, okay, you've had your fun. Now it's time to grow up and act like an adult.
Right.
And that's kind of a flippant way of referring to things like Sarbox and Dodd Frank and other legislation. And now Senator Warren is probably one of the most outspoken regarding the GameStop run up and
Right.
the ensuing chaos that you know volatility got so high that the brokerages actually had to stop trading to meet their margin calls from the clearinghouses. Right. So again, it's fun to screw the hedge funds, but things can get out of hand really quickly. And the problem with it that I see now is, this is not 2001. Okay, when .com became .gone, yeah, a lot of people got burned, but we're not talking, millions or billions, because this is now an international market and the smartphone has democratized and globalized your power as an individual retail investor. The problem is that we are now in a system where changing it no to notionally protect the so-called little guy, is going to probably be catastrophic. Okay,
Right.
because a lot of the issues that you know are being brought up by senators and congressmen who may or may not have sufficient expertise in this, things like payment for order flow, we don't have to pay commission on trades anymore in a lot of online brokerages. Well, why is that? They're still making money. And like always, if it's not free, you're the product. Uh, you cannot force or legislate that business model out of existence and force innovation to be basically abandoned,
Well, like,
to
you know
go
how to
back to
solve
the
that?
other way.
You know how
How
you
do you
solve
solve
that?
that, Vin? How do you
Actually
solve
enforce
so I can vote for you?
actually enforcing the law. I think, again, back to, history may not repeat, but it rhymes. I think it's more, I think it's more on the repeat because politicians and enforcement don't actually have a backbone. So they kind of had it coming too, because if you look at
Right.
history, '08, for example, you had all these people that that actually broke crimes and actually manipulated, actually cheated and
Hmm.
lied. There was little to no punishment. So if you're
Right.
gonna
They got
pass
bailed
these,
out and gave golden
yeah.
parachutes to all their
So
executives. Yeah.
yeah, so that's why my point earlier was creating more laws and regulations isn't going to do anything. If you just do it now, and where you
Hmm.
set the basic, kind of like the Constitution of sorts, right? If you set the basic blueprint of what not to violate and what's good and what's not, and let the free market roll, but you enforce that legal outline, you won't have these problems as much. You'll always have problems because you're always going to have knuckleheads snorting coke all day trying to, make the quick buck. But if you actually enforce and show that you're serious, people are going to think twice. That's just
Right.
the way it is. You're going to think twice about doing those things that are causing issues.
Right.
So that's why I'm always in the middle when it comes to regulation, because I get both sides of it. But at the end of the day, you just have to freaking enforce what you preach. So when you hear the Warrens of the world, or you hear the Allison Lees of the world, or Gary, Gensler, are they actually going to enforce this stuff?
Well, I
And
think
they're
Gensler certainly will,
right,
because he has a reputation for being a hard ass, and
right,
he came from Goldman Sachs. So I mean, you can't be a pushover
right.
if you survive Goldman
But
Sachs.
don't
That's just
forget,
how the game works.
he was brought in by Obama in '08 to help, help
Oh yeah,
oversee and change things. But again,
right.
only one person went to jail.
Well, sure, and
So
and that's
yeah,
one of the big questions. Like, okay, yeah, he's a hard ass. I think we certainly needed him in '08, to especially overhaul the swaps market. You know, do we need? Is that the right type of enforcement mindset that we need now? I guess it doesn't really matter because he's the SEC chairman, whether we like him or not. But you are correct. There is a chasm of difference between passing a law and actually enforcing it, and I think a lot of the issues are systemic. So, okay, let me give you an example that may or may not bore our listenership to
right,
tears. So, you know, you Allison Lee, for specific, uh, led a lot of legislative effort to impose repercussions on managers who misled the public about certain initiatives within their company, like supply chain sustainability, environmental efforts, things of that nature. Now, obviously, again, people are voting with their wallets. If you are a company manager, if you're a fund manager, you know, it doesn't really matter if you believe in sustainability or climate change or anything of the sort. That's not relevant because your investors believe in it. And if they're investing in your company, again, they have shares, they get a vote. You kind of need to listen to them. So on the surface, yes, it's good that there were these kind of efforts, but, and here's the big but, and this is where I think a lot of the regulation is broken. Uh, it fails to acknowledge that for certain things, there's always going to be an asymmetry of information between the company and the public. And second of all, a lot of these intentions are noble, but the materiality of the information is intentionally vague, right? So there's something called the Public Company Accountability Accounting Oversight Board that publishes what's called Auditing Standard Number 5, that provides you guidelines for how to report material financials, but there's no formula. And FASB, Financial Accounting Standards Board, and the SEC have repeatedly stated that materiality of information that you are required to present to the public cannot, should not, will not be reduced to a formula. So you have no threshold, right? So if you don't have a threshold, you don't have an objective way of showing that you're in compliance, you get a lot of latitude, maybe excessive latitude, for best judgment decisions. So we have, this legislative effort that on the surface is good. We have the background for it with Standard 5. We have support for it from the SEC and FASB. But what do we get out of it?
Doesn't do anything.
There's no objectivity. So what the hell have you actually accomplished?
It's a lot like these SPAC companies. They have great hype, and they look great, they have concepts, but they actually don't implement, and somehow they get a lot of street cred and they raise money. So, and we keep dumping money into these, and they keep dumping money into to setting up these committees and these oversight boards. But again, like you said, what do we get out of it? It's a waste of taxpayer dollars unless you actually enforce things. Right. So I think that's really the problem. So when people say, "Oh, we need more regulation," no.
That's not the answer.
No, we just need to implement and actually set an example, right? It's like anything else in crime, people, if you actually enforce things, they're not going to do those things. I mean, you're always going to have the crazy ones or the, things, folks that don't care and will try to get away with it. That's never going to go away. But the goal is to reduce as much as you can and to prevent more and more of this continuance of stupidity and greed and ignorance and all those sorts. But so that's why there's so many of these earthquakes. This big earthquake is going to happen. I think it's going to be like a freaking, what's the movie with The Rock? The big earthquake,
San Andreas.
Oh, it's going to be San Andreas. It wouldn't get our shit together. But yeah.
Well, why did you make me remember that?
Because I know you hate the movie.
Fantastic masterpiece of artistic expression.
Look,
I hope The Rock's not listening. Please, Dwayne, don't hurt me.
Look, Dwayne,
just because I didn't like it.
Dwayne Johnson, The Rock, we love you. Just some of your movies suck, but we love you. You make me feel bad about myself after I scroll through.
I know. I'm sure he's gonna cry from our opinion.
Yeah, right. He's gonna be like, yeah. So the issues at hand that we're facing, really, to summarize everything here and what, with the issues at hand and what lies ahead, I just think the issues is just, being able to, we just talked about, enforce the laws that are there, right? Yeah. I think, people have to start, really taking a step back and understanding what investing really is again.
Right.
And getting back to profit and purpose, which is the point of our country.
Yeah.
And I know that sounds, not wishy-washy, but kumbaya and sorts, but it's really not. The whole purpose of our market is that companies are creating products that are great, that people will buy, and creating a investing back in the community, and you have investors that benefit from that, and that's how really the system works, right? I mean, that's really what it's. I know, like, it's really should be boring, to be honest with you.
I mean, it should be boring. It should be efficient, right? And that's that's kind of the SEC's job. And surprise, surprise, the Democrats and the GOP do not agree on anything, including this. On the one side, everybody's clamoring for more disclosure. The public needs to be more educated. On the other side, that's just going to hammer down on everything unnecessarily. And again, if you do not believe or do not understand how expensive and how much of a pain in the ass disclosure compliance can be, I highly urge you to take your company public and find out for yourself.
Right.
And you'll rue the day you were born. But I think the problem that we're seeing here is the SEC and other agencies like them are regulatory. Okay, and when we're seeing this a lot with antitrust, when you start overstepping your bounds, you're not only creating bad legislation, you're abusing and possibly uh, irrevocably harming everyone else. Okay, so for instance, securities are not how you address uh, public concerns, right? Environmental issues, uh, climate change, political spending, whatever your cause du jour is. Okay, that is not a regulatory issue. The SEC and everybody else should not give even a shadow of a shit about how that comes into the market, because that's not their job. That's the job for NGOs, for DOJ agencies, for whatever. We have that system in place right now. So leave that part of uh, uh, out of your scope when you look at the market. What you need to look at if you want to argue the social good of legislation and regulation, how does the current structure, and I don't just mean trade and liquidity providers, but I mean things like payment for order flow, you know, how is that actually benefiting
Right.
the consumer?
Well, that's a really good point. People just need to do their damn jobs, right? I mean, government is there to protect the common the common folk, right? I guess, or whatever the politically correct term is. The general, protect the citizens. And I think when you said, like you said, when you have regulatory folks like SEC and sorts need to do their job, and they need to let the market be the market, because it's going to happen, right? The whole NGO and environmentally friendly, you're already seeing that without the SEC doing anything.
Right.
Exxon, for example, got
Oh yeah.
completely bitch slapped in the face by
The engine one, right?
Engine One, yeah, a
Yeah.
activist investment group. So government needs to know this place again. You're there to create uh, outline, like a regulatory outline of what not to do and what to do from a legal standpoint to protect people and the citizens of this country. And then anything beyond that, whether it's woke stuff or environmentally, whatever it is, you let that to the free market to decide. And the free market always decides,
Right.
because that's why you have investors and shareholders. And that's part of how the markets work. Companies open themselves up to public investors, and that's what you get. Sorry. And if you're not gonna, if you're not gonna make changes, and you're not gonna get up to speed with modern times, and even if you don't agree, shareholders will hold you to it. And that's the
Right.
beauty of our free market. And I think that's what needs to happen, is people need to understand, do your damn job, know your role, and understand how the whole economy and the markets work, and don't overstep your boundaries. And
Sure.
maybe you stop focusing on all that stuff that shareholders can do. Maybe you actually enforce the damn law.
Well, I mean, yeah, and that's a good point, Vin. And you know, regulators and legislators have to also realize that they're not always needed, right? So when again, and love picking on GameStop because this is just such a awesome textbook example. I
It's
I
such a great
guarantee you.
store that has nothing in it. It's fantastic.
Well, they have all the ThinkGeek stuff now. I thought, but no, I mean,
Who the
this
hell
is a
knows?
fantastic case that 20 years from now, people are going to be studying to get their business degree and kind of picking apart what happened and why. But, after that whole drama, okay, when Senator Warren was making a big fuss about, you know, payment for order flow and market manipulation and all that other stuff, they seem to forget the fact that, you know, companies like Citadel and Virtu and, all of these equity wholesalers that run the order flow models that allow us to have free trades, you know, were people pissed off at Robinhood for halting trading? Sure, but Robinhood also have a duty to defend themselves. What nobody's talking about is in terms of market force, you know, retail investors, especially in this day and age, can kind of take care of themselves.
Right.
Citadel got their asses kicked by a bunch of people on Reddit, who call each other retards and share gorilla pictures, uh, on their forum. It's
Right.
what we talked about earlier: supply and demand. The market will always correct, but legislators, especially legislators, regulators, you know what? They got to investigate. If they see potential market manipulation, they're delinquent in duty if they don't try to figure something out. I get it, right?
Right.
But in terms of what you're saying, like, we don't need more legislation. Uh, in case none of the lawmakers have been paying attention, the little guys are more than able to take care
Yeah.
of themselves.
Well, and
We
that's the
did
free
not
market.
need a law for that.
Well,
And correct, that is the free
and,
market at work.
and that's the free market, and that's why there's all these disclaimers. When you make investments and when you sign up on Robinhood or these other crap retail apps or whatever, sorry, I like to
We
use
don't all have personal bankers, Finn.
whatever. Joking. Uh, people can decide for themselves now because, again, you have terms of use, you have all these agreements, you have all these
Mhm.
disclosures, and you are an individual. You are a damn full grown ass adult. You can make your decisions,
In
and look,
theory, yes.
well, in theory, but look, you can't control what everyone does. You can set the outline and the standards. You can warn people all you want. I mean, a good analogy I do is a lot of it's like health. You can tell people not to, eat sugar all the damn time and eat healthier and all that and lose some damn weight and exercise and sorts. But you
Thanks,
can't.
Finn. It was enough to tell me over text.
No, 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 no. Because well, it's like the because we talked about this a while ago, right? We spend so much money about heart disease prevention and all these sorts, right?
Right.
But again, we tell people, but they still make their own damn decisions. So I think
Sure.
regulatory folks and the legislative folks, politicians, just need to understand you can't dictate and tell people what to do at all. Like you can provide all the facts and information you
Mhm.
want. You can provide the regulations that and law that provides an outline and a guidance. But you're not. But there's no amount of regulations that you can put forth to be able to prevent any of this, right?
Right. So you cannot legislate intelligence.
No, that's
That's
why
just
we're a
not
free
how human
country.
nature works.
Well, that's why we're a free country, right? We're a free damn
Right.
country. We have a Bill of Rights, we have a Constitution, we all have the basic freedoms that many countries envy us for, and it's up to us to make our decisions and live our lives. And laws are passed because there are changes from the majority, and there are things that we
Mhm.
have to do to protect folks from people that deceive, lie, and cheat. But at the end of the day, like you just said with the retail investors, they're doing just fine.
Right.
And also in the world of so much information and access to advice and wisdom, there's no damn excuse. If you're not a knowledgeable investor, literally call your local bank.
Right.
Walk into TD Ameritrade, walk into Charles Schwab, Google. I mean, please look at actual legitimate sites.
Right.
Um,
Investopedia is your new
right.
Google.
Right. So there's books, there's so much information, there's no excuse. And you can't just handhold all the time. The
Right.
create regulatory matters to to keep Wall Street and Silicon Valley and these institutional guys in check, great. Create things to make sure that people are informed, great. But that's it. Beyond that, don't push it because you're going to create more problems than actually solving them. And I think that's end of the day the point, and that's why it's going to be very interesting to see what happens going forward.
Well, we're gonna find out soon enough whether we want to or not.
Right. So, I mean, what else do we have to tackle here? I mean, there's just so much we just hit there. And listeners, sorry for data dumping you with all this, but we're really hoping that this is helpful. And there will be plenty of more episodes moving forward covering this as all this unravels. And
Oh,
please submit,
absolutely.
yeah, and please submit all your questions and whatnot. But Willie, what else do we have to cover here?
I don't know, Ben. I think that's a pretty good rant for the day. Like you said, this is not something that's gonna go away, right? And
Right.
this has always been the balancing act of regulation and legislation. How do you do the absolute least amount possible with laws and constraints to protect the most amount of people to the greatest degree that you can? And that the concern that I have is that you know we seem to be approaching a precipice of moral legislation, right? Like
Oh boy. Yeah.
the the whole thing with the meme stocks and the market manipulation accusations, that can just be an SEC issue, right? When you
Yeah.
start investigating, well, should we take issue with this on the floor? Or should companies be permitted to gamify their stock trading model? When you start messing with the actual internal operations of a company and start dictating what can be a competitive advantage for them, that's when you start stepping over the line, right? That's where you
Right.
start inching toward a police state. And I, for one, uh, I don't want to have us be like the UK or Canada or Australia, where things like payment for order flow is outlawed, and there's, the brokerages I like using can't exist there because their business model is not legally permitted. I
Right.
don't want to, I do not want to see the US turn into some, socialist hellscape where short selling is disallowed because it seems wrong to profit off of failure. Like, no, I don't want that. Like, we have a lot of mechanisms in this country that are good and that protect uh, consumers and investors, even if it doesn't seem that way,
Yeah.
right? And that's my concern, is that too much legislative overreach is going to end up destroying a lot of what makes our markets fantastic and some of the best in the world.
Yeah, and that's why we're the wealthiest damn country that people envy every damn day, right? And to your point, and this will totally be another episode in itself. But I think lawmakers need to focus on just doing their damn jobs and understanding what their roles are, right? And understanding how our our government works and functions, which is based off the Constitution and the Bill of Rights. And you as a lawmaker, your job is, again, like you said, moral moral lawmaking isn't what they're supposed to do, right?
Right.
You need to keep personal and I guess in this business or job separate. And
Mhm.
just like I said earlier, I didn't agree with the stock memes or the stock or stocks, right? The meme stocks, but I understand why they're doing it, and they have the ability to do it. So, it doesn't mean if I was a lawmaker, I'm going to create a law to prevent it. No, because they have every right to do so. Right?
Right.
Yes, there might be some security things we got to look at, but that'll be the SEC's job. But overall, I love it. Have them do it. Look, they they're following the rules, they're doing what they are want to do, and they know the risk, so be it. But
Right.
me, if I was a lawmaker, I have no right to morally step in and create legislation that is morally saying, oh, you can't do this because of X, Y, and Z. That's personal, and that's my belief, and that's where but as a role as a lawmaker, I'm working for the citizens and following the rules of legislation of how to make legislation. I can't intervene that way, and I
Well,
think
some of
that's the
this
biggest
is just,
problem right now.
well, yeah, I mean, some of this is just solved with lawmakers having a spine, right?
Right,
Like it's no secret that politics is the career that the founding fathers probably never wanted to exist, but when you charge or look to charge Redditors for market manipulation, but you ignore the fact that, the hedge funds do worse things than that, that is an insult to the American people, right? When you
right,
bail out huge companies with taxpayer money, and they turn around and, use that money to give themselves fat bonuses because it's contractually obligated, you know what? No, screw you. That there's something that needs to be done with regard to how you as a lawmaker actually approach your function, right? And I don't know, I'm not a lawyer. I can't tell you that the answer is, well, you have to, regulate campaign donations more, or you can't do. I don't, because I don't have the answer. But like millions of other people in this country, I'm pretty good at figuring out that the system is screwed up and
right,
that our current approach is not working.
right.
And what the famous quote attributed to Einstein, what is the definition of insanity? You keep doing the same shit over and over and expect a different result.
But I can counter that and say it is working from a standpoint of, we have, what our founding again. Listeners, you can tune out if you want. It's going on, but
They
we'll definitely
already
cover.
have.
Yeah, we'll definitely talk about this in another episode. But I think we do have a beautiful system, the most beautiful one in the world, because our founding fathers, built a system constitutionally outlined, to create a system in where it's supposed to be this difficult to legislate and supposed to be opening up debate, because it prevents from a one system like a other government that you see, right? That people come to this country for a reason because they have the freedoms and the ability, and even though we don't have a perfect system, it's the most perfect in the world because it doesn't allow one sway or the other because of one person or one group. It requires the unanimous decision and also the negotiation to be able to push out the best bill, right, and the best laws. So I totally get where you're coming from, but I honestly think we have a great system because you know nothing good is supposed to be ever easy, right?
Oh yeah. Well, we
And
have the best then, because nothing
yeah,
is ever easy here.
no, because if it's easy, you're going to get fallen into the governments of history and the people of history that they get influenced the wrong way. Laws get passed in the wrong way, and you start getting socialism, then communism, then dictatorship, right? So that's
Right.
why we have that's a whole nother thing, and I think people should read the Federalist Papers, by the way. But
Shameless
I
plug.
will,
They're
yeah.
also free to download, much like company reports.
Exactly. So we'll end our rant there. I think, we just kind of give a hint of possibly what we'll talk about next, which is, our beautiful system in America that people envy. But also, it's a love hate, right? But it's still the perfect
Right.
system. I will not be ashamed to say that. And we hope this financial earthquakes, has been very informative, and I'm sure we'll have more episodes to help break it down further and simplify it further to make sure that our listeners understand and how they can protect themselves and even profit from learning what we're preaching here. So, with that,
We'll see.
we'll see. Take care, everybody.
Bye bye.